Most people think losing money in the stock market only happens when you pick a bad company. But that is not always true. Sometimes you pick a great company with real growth, a strong brand, and everyone and their mama is talking about it like it is the next big winner. And somehow, you still get cranked and lose money. Not because the company was bad, because the entry was trash. That is one of the most painful lessons in the market. A good stock can still become a bad trade when you buy it at the wrong time. This is where a lot of investors get caught lacking. They think the only thing that matters is picking the right ticker. But the ticker is only one piece of the puzzle. The entry matters, the plan matters, the risk matters, the exit matters, and your emotions? Your emotions might be the most expensive part of the whole trade. Because if you buy a good stock at a goofy price, do not be shocked when the market starts acting disrespectful. That is one of the biggest reasons Big Balla Walla is here. To help trading be built around rules. Not hype, not vibes, not guessing, rules. Because when you do not have rules, the market gives you emotions. And emotions are expensive. Emotions get you cooked. The goal is not to be perfect. The goal is to stop making dumb emotional decisions that blow up your account. Because the market does not care about your feelings, your hopes, or your, "I thought it was going higher," speech.
Now meet FOMO Fred. But Fred is not just a person. Fred is a stock market parasite. He starts controlling your mindset with FOMO, which means fear of missing out. He makes you think every green candle is your last chance. He makes you ignore your plan. Fred sees a stock moving. It is up 2%, then 5%, then 10%. The chart is green, and now Fred starts whispering, "Buy now before you miss it." That is when the trap starts. And I am not judging, because FOMO Fred has taken over me before too. Fred feels like the move is leaving without him. So now he is panicking. He says, "I gotta get in right now." No chart check, no support check, no risk check, no plan, just vibes and a buy button. Fred sees one green candle and starts clicking like the stock personally invited him to generational wealth. But really, Fred just bought after the party already started. And that is when the market starts setting the trap. At first, Fred feels like a genius. The stock goes up a little more. Now he is doing mental math on profits he does not even have yet. Talking about, "I might be built different." Then the market says, "Relax." The stock pulls back, not because the company is trash, not because the business fell apart, but because stocks do not go straight up forever. And now Fred is looking sick. The same green candle he chased is now the reason he is trapped. Now Fred is down, first 5%, then 10%, then maybe 15% or 20%. Now all of a sudden, Fred wants to become a research analyst. Should I hold? Should I average down? Is this still a good company? Was this a bad trade? Brother, these were pre-trade questions. You cannot do the homework after the market already snatched your lunch money. Fred did not lose because the company was bad. Fred lost because the entry was nasty.
This is the difference between emotional trading and rules-based investing. Emotional trading reacts. Rules-based investing prepares. Emotional trading says, "The stock is running. I need to buy now." Rules-based investing says, "Does this setup actually fit my plan?" Emotional trading says, "Everybody is talking about it." Rules-based investing says, "Is this near a clean level?" One is a plan. The other is panic with a brokerage account. And panic with a brokerage account is how portfolios get sent to the shadow realm. The market is always trying to rush you. Every green candle feels like the last chance. Every red day feels like the world is ending. Every big move makes you feel like you need to do something. But you do not need to trade everything. You do not need to catch every move. And you definitely do not need to chase every candle just because the internet started yelling. Sometimes the best move is sitting still. Boring? Yes. Account saving? Also yes. That is why Big Balla Walla focuses on categories. Not every stock is a full buy. Sometimes it is a leap entry. Sometimes it is starter only. Sometimes it is watchlist. Sometimes it is wait. And sometimes the best trade is doing absolutely nothing. I know that sounds boring. But boring is underrated when boring keeps your account from getting packed up. Because every setup does not deserve your money. Some setups need to sit outside and think about what they did. For small accounts, avoiding bad trades can be just as important as finding good ones. When your account is small, every mistake hits harder. You do not have unlimited capital. You cannot throw money at every idea like you are managing a hedge fund. You have to be selective. You have to be patient. You have to protect your buying power. Because not every good company deserves your money today. Some of them need to earn that entry. If the setup is not clean, it can wait in line like everybody else. This is especially true with leaps. A lot of people think leaps are automatically safe because they give you more time. And yes, leaps can be powerful. They give you time. They give you leverage. They let a smaller account control more upside. They can turn a strong stock move into a much bigger percentage gain. But do not get it twisted. Leaps are not magic. A bad entry on a leap can humble you quick. The contract might have time, but your account still has feelings. If you buy a leap at a trash entry, you can still get cooked. If the stock pulls back, your contract can bleed. If the stock chops sideways, your contract can bleed. If implied volatility drops, your contract can bleed. The company can still be fine. The CEO can still be great. The future can still be bright. And your option can still look like it got hit with a folding chair. That is why liking the stock is not enough. You need the setup to make sense too. The question is not only, do I like this stock? That question is too easy. The better question is this actually a quality leap entry? Because liking the stock and having a good leap setup are two different things. You can love a stock and still need to wait. You can believe in the company and still say, not here. That is discipline. That is patience. That is how you stop letting FOMO run your pockets. Because FOMO is not your friend. FOMO is that one cousin always trying to borrow money and never pay it back. The same idea applies to covered calls. A lot of investors hear covered calls and think it is free money. They own 100 shares. They sell a call, they collect premium, and now they think they cracked the code. But covered calls are not free money. You are selling upside, and if you sell calls too aggressively, you can cap the exact move you were waiting for. Now you were right on the stock and still fumbled the bag. That is a different type of pain. That is why Big Balla Walla does not treat covered calls like a premium chasing game. The goal is not to squeeze every penny out of the position. The goal is to collect premium without destroying the bigger plan. Sometimes that means using lower delta calls. Sometimes that means waiting for strength. Sometimes that means not selling a call at all. Because if the premium is not worth losing the shares, leave it alone. Do not get greedy and call it strategy. Sometimes that premium is bait with a bow on it. The same thing applies to cash secured puts. People see juicy premium and start acting brand new. They say, I can sell this put and make easy income. But before selling a cash secured put, there is one question that matters more than anything. Would I actually want to own the shares at this strike? If the answer is no, why are you selling the put? That is not strategy. That is premium chasing in a fake mustache. If assignment would make you panic, you probably had no business selling that put in the first place. If the stock drops and you get assigned, now you own the shares. And if you only sold the put because the premium looked nice, you might end up stuck in a position you never really wanted. That is not a system. That is hoping nothing bad happens. And hope is not a strategy. Premium is not free money. Premium is payment for taking risk. And if you do not respect the risk, the market will send you the invoice. With interest, and late fees, and no customer service number. This is why Big Balla Walla is building around rules. Leaps need rules. Covered calls need rules. Cash secured puts need rules. Long-term shares need rules. Because without rules, everything becomes emotional. You buy because you feel behind. You sell because you panic. You hold because you are attached. You average down because your ego will not let you admit the entry was bad. And before you know it, you are not trading. You are just reacting. And reacting is how the market turns your account into a lesson. So the next time you see a stock ripping, do not just ask, is this a good company? Ask, is this a good entry? A good stock can still become a bad trade if you buy it at the wrong price. The goal is not to catch every move. The goal is to stop making emotional ones. Because missing a trade hurts your ego. But taking a trash trade hurts your account. And the account is what we are protecting. Rules beat emotions. That is the whole message. This is why you stick to your plan. Not because your plan will always be perfect. But because having no plan is how you end up letting the market toss you around. Your plan keeps you grounded. Your rules slow you down. Your checklist keeps you from doing something stupid just because the chart is moving. And if the setup is not there, you wait. No begging, no chasing, no emotional entries, just patience, structure, and better decisions. That is how you stop trading like FOMO Fred. Big Balla Walla is not here to predict every move. Big Balla Walla is here to build better rules, better entries, better decisions, better discipline, because in the market, being emotional is expensive, and being patient is underrated. A good stock can still become a bad trade. A good idea can still have a bad entry. And a good trader still needs rules. So stop chasing trash setups. Build the plan, follow the rules, protect the account. This is Big Balla Walla. Rules beat emotions, not financial advice.